Hey folks, welcome back to the channel. This is Jason, and today I want to talk to you about Sofi's purchase of Wyndham Capital. So, all right, I didn't jump on this and make a video about it right away because I wanted to take a few things and digest those over a couple of days when it came to this purchase. So let's first off acknowledge that there are some particulars about this acquisition that we don't know very much about, and namely that is how much SoFi is willing to pay for Wyndham and what sorts of liabilities are they assuming in this purchase. So those numbers should come out next month, and that is during their quarterly conference call, and it's going to have a significant and immediate impact on what their financial statements look like in the short-term march towards profitability. Now, it was obvious in my last live stream that I wasn't all that enthusiastic about this announcement right away, but some of that was for purely selfish reasons. I want this march towards profitability to happen as quickly as possible. I want to be rewarded for my patience in the form of a higher stock price. But honestly, this is probably better for the company in the long run. So after looking at the available information on this deal and knowing something about the current lending environment, I don't think the long-term benefits of this purchase are all that far away. We're talking about months, not necessarily years. So the timing of this deal, SoFi's current portfolio of loans, their strong cash position, which I suspect was developed just for the purchase of this company, and their ability to hold loans and having an increasing deposit base make this possibly a very good deal for SoFi, depending on how much they're paying for Wyndham Capital and what sorts of liabilities they're assuming by purchasing the company. Wyndham Capital is a mortgage originator that is a digital-first company with limited physical presence, and that fits in really well to SoFi's ecosystem. The company has a long history too. It's been around since 2001 and has already weathered a couple of storms. But since this is a private company, there is limited publicly available information about the financial health of the company. But there have been quite a few breadcrumbs dropped over the years that give us a little bit of an idea. It is worth stating, though, that over the next 12 to 24 months, we are probably going to see a lot of consolidation among mortgage originators, as almost all lenders are facing some degree of distress. We've seen a collapse in demand as mortgage rates have driven many potential borrowers out of the market. But this is most acute among lenders that don't keep any of these loans on their balance sheet, and they are forced to create asset-backed securities and sell them on the open market to generate more cash, to create more loans, and to just get them off their balance sheet. So without a bank charter like SoFi has, and with increasing interest rates, we are seeing margins collapse with lenders like Wyndham Capital because the investors that fund these loans are demanding higher returns in the form of higher interest rates. And these interest rates that the investors are demanding are not fully being passed on to the mortgage holders, because basically that would collapse demand even further. So that is compacting margins a little bit. So as a chartered bank, SoFi's ability to hold these loans on their balance sheet for 6, maybe 12 months before packaging them up as seasoned loans in an asset-backed security will result in interest income that Wyndham wasn't seeing. It will also mean that when these securities go to market, they're going to sell at a smaller discount, meaning a higher price on these asset-backed securities, because the loans in the portfolio will be considered seasoned since payments have been made on them regularly since origination. In the beginning of this video, I mentioned that the timing of this deal is pretty important. It's important because the mortgage industry has taken a series of body blows in the last year that have resulted in massive declines in revenues for many, if not all, mortgage lenders. Most mortgage lenders saw a decline between 40 and 60% in mortgage originations in 2022. If you are in the market to buy a mortgage lender at a giant discount, now is probably the time. Now, there are no absolutely reliable numbers on the amount of revenue Wyndham Capital has had in the last few years because they are not a public company and they are not required to release this information. I've seen a bunch of estimates, but the ranges vary so wildly that I don't think that anyone should rely on those figures, and probably only the management of SoFi and Wyndham know the real numbers. We do know, though, that mortgage originations for Wyndham were around $5.4 billion in 2020 and $6.5 billion in 2021. That number may have dropped as much as 60% in 2022, and this is reflected by the fact that Wyndham has laid off about half of its staff. Almost all of this decline is simply a result of the changing interest rate environment. It has affected every company in the industry, and Wyndham is not unique at all. It is likely that Sofi is acquiring Wyndham at a massive discount to whatever their previous valuation was. Sofi has been hinting at an acquisition like this for a while, and they've been building a cash position. As I stated before, I was initially surprised by this news, but after thinking about it for a couple of days, I find it less surprising. And now that I've taken a look at it closely, I'm a little bit more positive on this. But there are some unknowns. This could possibly be a very good deal made at the right time for Sofi, but it is really dependent on a few things that we are in the dark about. Number one, like what do current revenue and earnings look like for Wyndham? Number two, they're a private company and it doesn't look like they've gone through any rounds of funding, but what does their debt situation look like? Number three, what price was Sofi willing to pay to acquire them? And finally, this is the big unknown, when are interest rates going to stop rising? It's the big one because when interest rates stop rising, there's going to be a big initial spike in profit margins when interest rates stop rising, and an even greater expansion, at least for a while, when interest rates start to decline as we see improving spreads. So the bottom line is, I think this is probably a net positive. The benefits to profitability are going to come down the road, but probably not years away. And there are a lot of unknowns, but these will be cleared up most likely on May 1st when Sofi has its quarterly investor call. Anyway, folks, that's just my short video and opinion. Feel free to let me know what you guys think in the comments below. You can tell me how wrong I am. Remember, I'm just some idiot on the internet making videos. This is not an endorsement to buy, sell, or hold any security. You got to do your own research and your own due diligence. I'll see you next time.